You have successfully joined the webcast. Please stand by. The meeting will begin shortly. You have successfully joined the webcast. Please stand by. The meeting will begin shortly. You have successfully joined the webcast. Please stand by. The meeting will begin shortly. You have successfully joined the webcast. Please stand by. The meeting will begin shortly. You have successfully joined the webcast. Please stand by. The meeting will begin shortly.
All right. Well, good morning. My name is Kevin Law, and as chair, I now call to order the meeting of the Audit and Budget Committee and the members of the New York State Urban Development Corporation doing business as Empire State Development for Thursday, June 25th, 2026. This meeting is being webcasted. The public was given an opportunity to participate, and nobody, I do not see anybody here. They were also able to submit written comments by noon yesterday, and we have not received any comments regarding any of the items on the agenda today. The committee members received all the materials in advance for the meeting. And since we're not taking any votes, there's no need to disclose any potential conflicts. I will welcome our new member, Martha Lees. Thank you for joining the board. And we have a forum. We're able to do business. So I will hand it over to Anthony DeLucio, ESD's Deputy Chief Financial Officer and Controller, to lead our discussion on the first agenda item relating to the annual financial reports.
Thank you, Chairman, and good morning. Everyone should have a copy of the presentation prepared by our auditors, EFPR. In the presentation, there are 5 tabs. The first tab actually includes the opinion on the financial statements that EFPR has issued, which is an unmodified, unqualified, clean opinion. The second tab, the analysis of the consolidated financial statements, really includes our management discussion and analysis, which is really a required supplemental information item that EFPR does limited procedures on. They will take you through some of that. The MD&A really summarizes some of our programs, really discusses the numbers, and really analyzes the change in net position. Pages 21 and 22 was an analytical review in that section that EFPR prepared, which they will take you through in a few minutes. Tab 3 has 3 required letters that EFPR has issued. The first being the letter on internal control, which really indicates that there were no material weaknesses or significant deficiencies as a result of the audit of the financial statements. It's sort of a byproduct of the audit of the work they do on the internal control structure of Empire State Development. The second letter, the report on investment compliance, really indicates the corporation's compliance with the codes, rules, regulations of the state. Once again, there were no findings reported by EFPR. The last letter, which is really the report that deals with the federal programs, the assistance that we get, the schedule of federal expenditures that we receive, and the federal programs that EFPR has tested, which we refer to as the single audit. Once again, there were no findings. The fourth tab is a communication that the American Institute of CPA's Auditing Standards Board requires EFPR to issue to the audit committee, which discusses our accounting estimates, discusses if there were any disagreements with the client, any difficulties, etc. Once again, positive results, EFPR will refer to that. And last but not least, in tab 5 is our complete financial statements with the respective letters. At this point, I'd like to turn it over to EFPR.
Thanks, Tony. Good morning, everyone. I'm Doug Zimmerman, one of the partners with EFPR, and this is Brent Jensen, one of the other partners. So as Tony alluded to, we provided all of this information. Just to give you a very high summary, we came out in March to do interim work for the audit for a week. We then came back for the entire month of May for 4 weeks. Worked with Ray, Tony, the entire team in the finance department had outstanding cooperation. I mean, quite frankly, the only way of an organization of this size that we're able to meet, here to review this is if management maintains those records throughout the year and is able to quickly provide us with all the needed information to be able to go through the audit and be able to have this draft report and final report ready for everybody. And you are required to file this by the end of June. There's a requirement with the state that you've got 3 months to complete it. So again, you've always filed on a timely basis, and other than the COVID year, but that's beside the point. And we certainly appreciate all the cooperation we received. And again, as Tony alluded to, there were no findings or no issues. Everything was as it was supposed to be. I will just kind of cover a couple of those items that Tony mentioned in just slightly more detail. Again, clean opinions, clean reports, no internal control findings, no management findings. The one item I did want to point out in tab 3, we do issue that report on the single audit. You received $53 million of federal dollars this year. We audited 2 programs, the Economic Adjustment Assistance, which everybody thinks of here as your tourism funds. That was about $19.3 million. And then your community investment dollars, which was about $2.5 million. And that was all passed through to 4 different entities. We don't audit all of the dollars, just like on the financial statement audit. We're not auditing every dollar that you receive, every dollar that you disperse. There's materiality in place, and the federal rules are that they have us go through a risk-based approach. So we don't audit the same program every year. It kind of rotates around based on the programs you're receiving each year. But again, all clean opinions. Really, there's nothing else from a reporting point of view that we wanted to mention to the committee. What we do want to do is, as Tony alluded to, is go through some of the financial highlights, and I'm going to turn over to Brent to cover that. And that's going to be in tab 2 of the handout. And you're going to set on what page?
Page 22. There's 2 large pull-out pages in there, page 21 and 22. The second of those 2 pages is really the summary of the statement of revenue, expenses, and changes in that position, or you could think of it as your income statement. And every line here has a description from us of essentially what either makes up an account or a line item or what changed within it. I'm not going to take you through all of them. I'm going to take you through the high points of what generated your net income this year, net operating income, and what that might mean a little bit in terms of future as well. So on page 22, probably about 3/4 of the way down the page, you get down to a line called operating income. And you did generate an operating income of about $424 million this year. The reality of that operating income is you're generating it because you have about $600 million spent on building the stadium in Western New York this year. and about $170 million of depreciation against all your held capital assets. The difference between those two numbers is what really generates your net income. And that's because you have that money of the 600 million being funded by external sources, including state appropriations, county funds, and the team's funds that they're putting in. So that's all revenue to you. Whereas your expenditure to build the stadium is all capital assets. So it's all going onto the balance sheet right now. So that is really the entire reason you are generating a net operating income right now, is because you have a large scale capital project being funded by third parties.
And was that the same for 2025?
That's been the same for 2025. That's been the same for really a number of years, because you've either had large scale capital work going on at the Javits Convention Center, the Moynihan train station, or the Buffalo Bills Stadium. Without one of those large scale third party funded projects going on, you actually would generate a small loss on an operating sense. With the depreciation of those projects, it's actually going to generate what looks like even a larger loss going forward if you don't have any large scale projects. So that's what I wanted to kind of break down, is where that operating income is coming from and what it means for the future. Now that the stadium is actually opening this year, the stadium's going to start to be adding to the depreciation. So we're talking about 170 million in depreciation this year, mostly from the Javits Convention Center and the Moynihan train station. You're probably talking about another 40 or 50 million in depreciation coming from the stadium next year on top of that. So you're probably talking over $200 million in depreciation. No offsetting income from a large scale third party funded project. So it's going to really flip how this financial looks quite a bit, where you're currently showing this large net income. You're very likely to show a large net loss next year based on really just non-cash items of this depreciation of the previously funded projects. So that's the biggest takeaway I wanted to give you. I will go into a few other items of what changed a few other areas as well. So if you look at the total operating income and total operating expenses in the current year, and you see that they're both up by a ballpark of 150 to 200 million. Most of that increase is generated through the economic development grants, for which you are really just a pass-through. That is state funding that is coming to you to fund third-party projects that the state has essentially designated you to run for them. So those two numbers really always work in concert. You can see that over the years that those two numbers have been very nearly identical. You're talking about 1,275 million both in revenue and expenses this year, and similar numbers in the past 2 years as well. But this year is up quite a bit from the prior year, which just means you have more activity running through, but no real net impact from it.
And are these monies federal monies, or are these sort of the
No, this is
of monies that are put in the state budget that are passed through to us?
It's really the state budget funds. The timing might not always align perfectly to the state budget, because you do have some time it takes you to actually administer these programs. So there could be some lag on some of that. But it is essentially the state budget related funds. So that's really what's driving what's happening on the income statement. On the balance sheet.
Hey, before you leave that.
Yeah, absolutely.
Just operating revenue, the hotel tax revenue. Can you explain that to me?
Sure. One of our subsidiaries is the Convention Center Development Corporation, and the state levies $1.50 hotel unit fee, known as the HUF, on every occupied hotel in New York City. And we had used that money to borrow. It's the security for borrowing. We did the renovate the Javits back in 15 and 16. And so that money comes to us, and then it goes to pay the debt service.
Got it.
So that $1.50 has been, it died during the COVID when no one stayed in a hotel. It was the whole structure was walking, and it's come back. And last year was our highest year ever This is as much money as the Hub has ever generated, which is great news for both debt, and it allowed us this year, which you'll see next year's financial statements, in the current year, to refinance that debt at a much lower rate. We got triple the rate.
And it's $1.50 for every hotel room in New York City. Occupied.
Yeah, occupied.
Right. So, when you go to a hotel and you see all the various taxes on there.
Yeah, there's a fee on top of that, $1.50.
Oh, so it's not part of the hotel tax. It's a special fee,
Yep.
$1.50 for occupied rooms, and it comes to us and allows us to borrow. And that's a part of the revenue stream to pay it off.
100%. Yeah.
Cool. Got it. Thanks.
And I would just also add that it's been $1.50 forever. So when you see it going up 10% this year, that's actually a 10% increase in occupied rooms. That's not because of a change in the fee.
This also sounds like it's a good barometer for tourism increase.
It actually really is, because what's interesting about it this year is that we saw both an increase in the supply of hotel rooms, as some of the hotel rooms that had been blocked off for the migrant surge that we'd seen came back online, and then occupancy went even higher than its sort of normal. It lives in sort of a 75-ish, 80-ish space, and a occupancy rate. It was like 84%. Last year. Yeah, so both things went up. It was a great year for New York City's hotel unit.
Good.
Yeah, that's great. And
So
hopefully the World Cup's helping. Right? Hopefully this year will be the
What page we going to next one?
It's the prior page.
Prior page.
So there were a couple things on here that I want to point out as well. Your overall net position at the bottom is where you see that $400 million change come as an increase to the net position that we talked about from the operating result. And this also breaks down where you landed as of 3/31 in terms of your total assets and your total liabilities. The major change that happened in the current year in both total assets and total liabilities relates to the state guaranteed debt that you issued. So your total assets are down by about $750 million. Most of that is in that caption called due from New York State that went from $9.9 billion down to about $9.4 billion. That due from New York State is essentially a direct offset against the debt that you've issued for state purposes, where when you issue debt and you actually provide the funds back to the state for them to use, you write up this due from New York State. So offsetting that, you can look at the bonds and notes payable down in the non-current liabilities, where you see a decrease from about 16.2 billion to about 15.25 billion. That's happening because you didn't have any new state guaranteed debt this year, first of all. You had normal debt service payments on some of the debt outstanding. And then you also had certain defeasances that occurred. So the state provided you with some funds in advance to actually defease your own debt in some cases, as well as having a third-party agency defease some debt on your behalf by issuing state guaranteed debt that refunded some of yours. So all of those factors reduce your total debt outstanding by almost $900 million. And because of that, also reduce the related receivable from New York State. So that's really what's driving your overall change in your total assets and your total liabilities in the current year. So that's kind of the high-level view of what happened this year in terms of the largest dollar items that change in the financial statements. I'll take questions on anything in the whole financial, anyone had a question.
Seems pretty, very thorough job, and
I'd like to add, Kevin, that Tony and the team did a great job. It's really firing on all cylinders. The accounting team is really in great shape. Built up some of the staff. And this is a direct result of the great work that they've done. And they appear as some great partners with us. In fact, it went so well that after hours, we had a jigsaw puzzle, a 2,000-piece jigsaw puzzle on the counter. And after hours, the accounting team on our side and the accountants working for EFPR would work together on the puzzle. That's great. Yeah, it took us like a month to do. Yeah, it was a great result. It's a really And I think Brent's warning as well, taking that next year, and none of us will remember except us. But 12 months from now, we'll remind you that it's going to look different, and the story will probably be exactly what we said, unless someone drops a giant capital project on us in the next 9 months, which could happen, but chances are it won't.
Yeah, very good. Well, thank you, Tony and team and Brent. And thanks for the job well done. And bottom line is fiduciary duties as board members. Nothing for us to be concerned about. Nothing, no red flags in any particular area that you looked under the hood on.
Correct.
And
We know help.
very good. Very good. And so at the board meeting, we have to adopt this?
Yes.
So why isn't the audit committee approving it too and making a recommendation to the board to approve this?
Because
Why are we not taking action? I don't
because the
understand.
audit committee is a non-voting committee of the board. It was set up that way.
I've served on 100 boards and I've never heard of that before. It just seems like the audit and finance committee usually, they take action and then they make referrals or recommendations to the board, but
In my presentation, Chairman, I do indicate that to the board, I do indicate that we presented to the audit committee meeting this morning.
right.
And I think the committee still recommends to the board, isn't it? It's not part of
Yeah,
the description of it.
But not in a vote.
But that's not, we're not voting on any, so we don't.
Well, I think other board members rely on an audit committee that they went through all this in detail. And so, again, just my experience with the board.
One of the comments that I made is that the audit committee accepted it.
Okay, but we're accepting it without an action.
Correct.
How do you know we accepted it? Just based on my nice questions?
Your nice questions and Tony's representation. You're not alone in the frame.
It's a procedural issue that sometimes we're different than other entities.
Right, it's unique in all ways.
All right, all good. Well, thank you. And Tony, thank you. Yes, you can make that representation, Tony. All right. Okay, any other questions for the team? Nope. All right. Let's see, we will now move on to our second and last item on the agenda. We will have Steve Konopko, right? Did I screw that up?
No, that's fine.
I had it right the last time. And he's our VP of Internal Audit and present the Internal Audit Progress Report.
Thank you, Chairman, members of the committee. It's a short update since we had the big update in March. We're still doing the Connect All audit for large broadband group in ESD, so that's still ongoing. We completed our review of Erie Canal Harbor Development Corporation and the Office of Contractor and Supplier Diversity. Those reports are with management and they should be issued early next month. We're still trying to fill our open position. No luck. We've had several first interviews and then no second interviews, unfortunately, but hopefully to fill that position soon. That's really my report, except to say that the annual internal control certification that goes on every year, we reported on it in March that it was ongoing, has been completed. And we've got a clean bill of health. Our internal control system is operating as designed, and Hope has signed the forms and we've submitted them to the agencies.
Good.
That's my report.
Two things, Steve. How do you determine what things to audit? Do you just sort of have every year you're looking at a couple of different things, or does Hope or Kevin say, hey, we need to take a look at this? Or how do you determine out of the blunderbuss of things that we do here?
So on an annual basis, we do a risk assessment internally where we assess all the departments. We look at, if like, for example, Connect All is a new area. We hadn't looked at it before, so it would be a higher risk. We want to get in there and look at that department. But we risk rate all the areas. We look at the internal control certifications that the departments do. see if there is any change. We look at any change in staff management. We look at what EFPR does. And then we assess all the entities and look at when the last time we audited those areas. And then we come up with a plan submitted to the audit committee in March, and then we execute that plan.
Got it.
There had been times where if management has a concern about an area, maybe it's a new area, that they've come to us and said, hey, could we take a look at this? We will do that, obviously. But that's, that would be something that doesn't happen very often, but it could.
Yep.
During COVID, like, for example, they changed certain things in Treasury where we used to run checks, but people weren't in the office. So they established a procedure where the bank would do the checks. So because it was a new procedure, we looked at just that procedure. So we'll do limited scope reviews if these procedures change, and we want to make sure the control is still, there's no risk in that control. So that's how we do that.
Got it.
A couple of years ago, we have both got a project together, function team to do the guidelines, do those type of things. And a couple of years ago, we added internal audit at the beginning to really help us think about it, the auditing and the risks from the stuff. So that's been really helpful to have these guys that prepared from the start, participating in those discussions.
Very good. And the second question, why are you having a hard time filling a position? Ray just talked about how they built out a really good team in the accounting department.
Nice scoop up all good.
Well, I think it's a lively job market, and people, we've had a couple of really good interviews, and when you try and schedule a second interview, they accepted another position. It's just the way it goes. So,
There also aren't that many accounting type folks graduating from schools anymore. It seems to be they go in and out of fashion.
Is it entry level position or?
a little bit higher than entry. It's senior auditor.
But you want a CPA or you want to?
No, not so much that, but we're looking for someone with a few years experience.
Got it. And do we try to steal from other agencies or other authorities sometimes, or how do we advertise?
DFS is a big target.
Obviously, yeah.
We do it through HR. They have a whole talent acquisition team.
Got it.
So we're just waiting for Ray to hire a few good people, and then we'll
And
just.
then he'll steal them from me. That's not real life.
Okay. All right. Good to know. All right. Thanks, Steve. Does anybody have any questions for Steve? Hearing none. I think that concludes our agenda, unless anybody else has anything they want to raise at this time. And we don't have any comment from the public on either this item or the financial statements. So I will move to adjourn, and Hope seconds it. And all in favor? Aye. We are adjourned, and thank you for your work and your presentations.
Thank you, everyone.
All right.